Now we're going to turn our attention on calculating benefits when the focus of your strategic initiative is to improve some sort of non-financial performance improvement. This is a tough one. You have to make some assumptions and you have to do a fair amount of mathematical manipulations in order to come up with what the benefits are. And let's say your strategic initiative addresses some real need for the organization, but you can't really tie it to either an increase in income or a reduction in costs. Improving employee morale or customer satisfaction or product reliability are all very real improvements. But are they really tangible? Well, they may not be so tangible. At least it may not be so straightforward of what the tangible nature of these benefits might be. What we have to do, though, is to translate these intangible benefits into something tangible. If your strategic initiative addresses a non-financial performance metric, we almost have to take it on a case-by-case basis. We have to rationalize our intangible benefit into either an increase in revenue or a decrease in costs or some sort of combination of both. Improved customer satisfaction may result in increased sales, particularly from repeat customers. It may also result in fewer complaints and calls to the customer service center, thus reducing our costs. Employee morale may result in increased productivity, which can lead to a reduction in costs. More work is getting done on a per-hour basis in this case. And you know what? A happy sales force may result in increased sales, thus driving increased income. Improved product reliability may result in more sales, or it may result in fewer returned products. In this case, it may reduce costs because of fewer service calls. To make this leap from the intangible to the tangible comes down to assumptions. Yikes! Does this mean we have to guess? Well, perhaps not. You can research the academic literature and other business literature for studies that look at things like employee retention rates or what happens when product reliability improves. Another approach is to benchmark. Go look at other organizations and see what they did and see if it's something similar and what the results they got. There are companies like the Gartner Group and the Corporate Executive Board that does benchmarking studies, and they publish the results. Actually, I should say that they sell those results. You may also be able to get benchmark data from professional organizations or industry associations. The studies you may find or the benchmarks that you may run across may not be directly applicable, but they may provide an indication or a rationale, an educated guess, if you will. In a later module, we'll cover sensitivity analysis that helps address this uncertainty that arises when making assumptions. If the stakes are real high, you may want to run a pilot project to see for yourself what the benefits are. You will have to make some assumptions when it comes to scale, and be aware you can't always control for every variable in a pilot, so there may be differences when you implement your strategic initiative in an organization. Now let's walk through an example. Let's say you work for a company that has a lot of meetings. Some of them are good, some of them are bad. They often start late, they run over time, and the people who run these meetings may not always be good at doing so as they could be. And a recent employee survey indicates that poorly run meetings are becoming a drag on morale. Now let's say you can create an app that rates meetings similar to how Amazon rates products. It also allows for anonymous feedback. And as a result, you can expect morale to improve. Just how do you translate that into a benefit? What you can do is you can look at a study, and it turns out someone did a study, and employee turnover can cost a company between $10,000 and $30,000 per employee. So we can take a look at that information. Let's walk through the process. So let's just say there are 2,000 employees in your company, and the current turnover rate is 5%. So that results in 100 employees each year leaving the organization, and we'll consider this regretted turnover, meaning these are employees that we just as soon not have lost. We'll use the lower number of $10,000 per lost employee. the company incurs $1 million loss as a result of employee turnover. And let's just say you, through the surveys and other work that you do, you can make the assumption that your app that you're going to develop is going to knock that turnover rate down by 1% to 4%. So instead of losing 100 employees a year, you only lose 80. And I should only say, only lose 80? That's still quite a bit. In any case, applying the same cost of $10,000 per employee, the incurred cost by the company as a result of turnover is $800,000, which results in a $200,000 saving. We did have to make an assumption here that it resulted in a 1% improvement in employee turnover. It does take some creativity and understanding of the business cause and effect to translate intangible benefits into something tangible. It's something that you do have to do for business case. As long as you keep your assumptions modest, and as I said before, we'll take a look at sensitivity analysis so we can play with this and do some what-if analysis, and we'll cover that in Module 8. But proficiency with Excel and some math sense does help make this process easier. We'll close our discussion of calculating the benefits with where we started, and that is the benefit rationale. To capture the complete value your strategic initiative brings to the table requires an understanding of just how your idea affects the business and the organization. You have to go through this mental process. Provided some guidelines here on how to do that, but again, most of these have to be done on a case-by-case basis, something you get better at with practice.